You're watching the Weekly Outlook here at XM.com. I'm Christina Marujos, and joining me today is Marios Hadjikyriacos, investment analyst. We'll be having a closer look at the week ahead. Marios, this past week was a roller coaster ride for markets, with the headlines regarding President Trump's health, as well as whether or not we'll get a stimulus package before the November 3rd election. After conflicting positions on a stimulus package, Trump stunned markets after he abandoned talks with the Democrats. Markets, however, powered higher despite the obvious risks. How can this be explained?
Hello, Christina. Well, there are two ways you can explain this. The first one is markets think that Trump is bluffing. He's done this countless times in the US-China negotiations. It's in the art of the deal. And basically, whenever things don't go your way in a negotiating process, just threaten to walk away and maybe the other side will come closer to you and concede some ground. The other explanation, which I believe is far more likely, is that the markets saw Trump pulling out of the negotiations and thought this is a disastrous political move. It's going to play very badly with voters, and therefore it increases the chances of a decisive Biden victory where the Democrats take both the White House and full control of Congress. Now, if that happens, that would imply a bigger spending package and also higher chances of extra packages in the future if anything goes wrong. Even though we would have to wait until the next year for the new Congress to come in, until anything gets done, the end game is worth it. Why not wait a few extra months if that means an extra $1 trillion or so in stimulus? So I think that the markets are seeing all of this and they are thinking it's a win-win situation. Either Trump is bluffing and he'll come back to the negotiating table soon, or this boosts the chances of Biden coming in and he's going to deliver the stimulus that we want. Now, overall, I would argue that this election has become the central theme for the markets right now. So going forward, incoming opinion polls will probably overshadow economic data and everything else. Now, as far as the markets are concerned, the more signs that we see that the Democrats are growing their lead, the better it's going to be for stock markets and the worse it's going to be for the dollar, because chances of greater stimulus mean bigger US deficits, and that's a negative input for the US dollar. To wrap this up, I believe that the biggest risk for the markets right now would be any signs that Trump and the Republicans are staging a comeback, because that would diminish the chances of massive spending.
Turning to the dollar now, of course it's been affected by all this, but maybe there are further risks ahead for the currency with inflation data and retail sales coming up on Tuesday and Friday respectively. Could the numbers further pressure the dollar?
I don't think so. The US data are actually expected to be solid, both inflation and retail sales, and that could reinforce the Fed's reluctance to signal any new stimulus for now. Now compare this with Europe, where there's a second virus wave, there's a strong possibility of new partial lockdowns across Europe, and the ECB may be forced to act again this year because we saw the Eurozone's core inflation rate hitting a new record low lately. This would argue for another wave lower in euro-dollar, I believe, but having said that, the bigger driver for the pair will of course be expectations around the election.
Crossing into the UK now, this will be a critical week with the Brexit deadline of October 15th approaching. Is a deal likely, and how is the pound projected to move?
First of all, it's not a hard deadline, the 15th of October. There are no hard deadlines in politics, first of all. And secondly, throughout this negotiating process, deals are only made at the last possible moment. And that's not the 15th of October. The negotiations might stretch into November or even December. So overall, I think that the next few weeks will be a rocky period for the pound. We might see a lot of posturing, Boris Johnson throwing more hard balls if a breakthrough doesn't seem imminent. But overall, I would argue that a deal is still the most likely eventual outcome, because both sides have too much to lose by not finding a deal. So we might see the pound stay under some pressure for now amidst all this drama, but eventually I believe that we're going to see a deal, and that could help the currency stage a monster rally.
Finally, Marios, is there anything else investors should be on the lookout for this coming week?
Yes, we are getting some employment data from Australia. The Reserve Bank at its latest meeting signaled that it might cut rates very soon, and these data are expected to be relatively soft. Their employment rate is expected to increase quite substantially. If that happens, it could almost seal the deal for a rate cut next month, and that could therefore hurt the Aussie, at least in the short term.
Marios, thank you very much for joining me today, and thank you for watching the Weekly Outlook here at XM.com.